I remember I'm on a trading session once, and a person, I'm sitting there trading, and a person asked, "Could you not say that word? It's offensive." And I was like, "Yeah, I'm not meaning it offensively, but it's a term where we just go into the market and we scalp. We just take really quick movements out of the market and hopefully take a little bit of money at the same time." So, let's just kind of talk about some ground rules. So basically, when we're scalping, what we're doing when we're scalping is we're looking to take advantage of volatility. So we want to catch volatility. So there are periods in the market when the market just simply doesn't move. It doesn't move. It just kind of goes sideways. It's in a contraction phase. However, there are other times when the market's moving a lot, and what we can do during those times when it's moving a lot is we can just align ourselves with the momentum, get into a trade, and then very quickly get out of that trade again. That's what we call a scalp. So what we're looking for when we set up these scalps is we're looking for volatility, periods where the market's moving faster and covering greater distance than at other times in the market. So there's a lot of things that we can do to identify volatility. We can use indicators, volatility indicators and stuff like that. But what I prefer to use is just observation. Just take a look at how bars are forming. If you've got bars that are covering, like this, if you've got bars that are covering the average true range of a bar is that distance, and then you all of a sudden get bars that are covering that type of distance in the same time period, you can see that your volatility is increasing over a period of time. The amount of ground that you're covering is increasing over time. So one of the great advantages, and this is something I preach a lot in the Apiary Fund, is that the market is constantly moving from periods of low vol to high vol, low volatility to high volatility. Or another way of saying that is we can also look at it as moving from periods of expansion or contraction, in this case, to keep the contraction, to expansion. So high volatility periods are typically also considered expansionary periods where the market is expanding. We talked a little bit about that in a previous episode of YouTube. So one of the things that we can do to help us find volatility is to look for periods where the market is in contractionary periods. It's neither going up nor down very much. It's just kind of staying within a very narrow range. And then we look for that market to break those ranges. So at that point where it breaks that range right there, let's just kind of give that a different color here. That point where it breaks that range, that contraction, is the first indication of an increase in volatility. So that's what I do, is I like to look at how those bars are forming. I like to look at the market structure. I like to look for periods in the market where there's low volatility, and that's when I get geared up. That's when I get my trade set up. I look, I look for how much volatility to expect out of the market, and then I set up a quick scalp to take advantage of those situations. One thing that you can do, number 2 here, one of the things that you can do to help you identify the volatility, increasing volatility, is to watch the speed of candle development. So watch the speed of the candle development. So if we're looking at this candle right here, we may see it develop like this, where you get a tick up, tick down, tick up, tick down, tick up, hold, tick down. So that would be one. You're watching the candle flicker, and it flickers slowly. So then we move over to this candle, and what we start to see is it starts to go like this. A lot of ticks, a lot of flickering, a lot of movement. What that increased flicker is telling us is that there's more interest coming into the market at that time. There are a lot of trades getting pushed through the market. And that's usually an indication, usually a sign that that volatility could be expanding, because what we're likely doing is we're getting caught in a narrow range with a lot of bids and asks stacked up on the high side and the low side, and then we get a lot of volatility. What that's doing is trying to gear up to break through that little support or resistance level that's being formed from the contraction. So that's one of the telltale signs that, once I see that candle flicker, flicker, and get faster movement, even though it's not covering any distance, that's when I look to start getting ready to set up some scalps. Another thing is let's kind of go through here. Let's take another thing, number 3 over here, is to look for volatility spikes after support or resistance. So as the market comes into a support level, so we see the market coming into support level, we see momentum and volatility shrink in that little zone. So the fact that we're coming into that support level is reason to start looking a little bit closer as to how that volatility is forming. So you see the support zone, you see the sideways consolidation, you watch the flicker in the candle, you watch that candle flicker. And again, that's another sign, another help to kind of get ready and prepped for a new style of trading. Either the trade is going to set up and move into an expansionary phase, or possibly you can catch a little bit of a few scalp trades. So those are 3 things that I like to look for. Another thing to consider as you're looking to, you're sitting down for your trading session. You have a lot of opportunities in the market. I always say that, you're never at a loss of opportunities. And so when you're done with a trade, I often like to pause for a minute and say, okay, now I'm looking for this to develop in the market. I know that there's going to be a development coming up. I know that there's a lot of things that I can do. I can build a position. I can take a structural trade. I can scalp, a lot of different things. But what I like to do is I really like to set up for a position trade where I enter a lot of different trades. But then while I'm setting up for that, I like to scalp in between that. So, for example, let's imagine, for example, we're coming down into a support. We're looking for a reversal trade to set up. Market gives us a little bit of sideways, then a little bit of up, and a little bit of down. And so all the while right in here, I'm setting up longs. So I'm adding small positions into the market. Maybe I enter one here, maybe again here, maybe here, maybe here, maybe here. But sometimes that market gets moved into that sideways zone. And so what I can do is I can take some of these trades like that one, and I can scalp it. I can take that trade off inside that little consolidation zone. I can book profit after profit after profit after profit, while the rest of the world is waiting for that moment where the market breaks out and starts to form its up leg. So that's one thing that I like to do, is I like to trade around a position. I like to use different techniques while I'm building a position. I use all these different techniques, to keep booking profit into the account as that market's starting to form its next leg. And when it forms that next leg, there's a ton of opportunity, a ton of profit opportunity in that. So build up a little bit of profit, a little bit of wiggle room in the trade, all the way up till the trade triggers, and then you're booking your good profit off that trade setup, the position that you've built. Those are just a couple of ideas. Let's jump over real quick. Let's take a look at the market and see if, oh yeah. So right now we've got one of those periods in the market marked by really low volatility. So really low volatility. So if I was to open up the market and look at this, you know, I'm saying we've got legs that are decreasing. Here, let's see here. This is real time, so we've got legs that are getting smaller and smaller. So you can literally see the volatility starting to shrink out. Then you've got candle, candle, candle. All of them are they're stuck in a sideways pattern, and you can look and watch how that green line is the ask, right? So you can watch and see how quickly that green line is moving, and it's not moving at all right now. There's no up or down movement at all. And so what I'd be doing right now is setting up for the scalp. This is one of those transition times where I'm using the low volatility to start to set up for my scalp. So we would come over here and set up. And one thing real quick is when you're setting up, let's just put a 0.1, a 0.1. Your take profit figure here, your take profit is important because whatever your take profit is, you're going to have, the market will need to expand or increase volatility that much in order to take advantage of the scalp. So we need at least a 2-pip increase in volatility in order for this trade to set up and stop loss, whatever it is. Now watch, you see how that's starting to flicker a little bit of flicker in that. It came down, it's pushed right back up, and it was just kind of moving. That's a good sign. The markets are getting anxious right now. They don't like the fact that it's gone nowhere for so long. There's no money to be made when it goes nowhere. And so it's starting to get a little anxious, and that's a good sign for a scalp. So we come over here. Now, unfortunately, we don't know which direction the market's going to break. It could break to the upside or downside. So, you know, we have to use other type of analysis to determine direction. But once we see that flickering start to come in, that's a good sign. And then we get ready to take advantage of whatever direction it breaks. So let's take advantage of a downward break here. Starting to lean down onto the downside. And volatility is not big enough to take advantage of a scalp at this juncture. So this would be a case where we're building into a position. We're going to build into a short position. And as that momentum grows, to the downside, we'll scalp out of those and maybe add to our position with a couple of scalps. Let's just see if we can get some volatility movement here. Let's see if that volatility can increase. And still real slow. I'm hoping the market will cooperate here and show us that increase in volatility. Sometimes you have to wait here for a long period of time. Sometimes you're just sitting there, like in the trading session last week with Dave from Blackfoot, Idaho, the firefighter. We went 20 minutes. 20 minutes with this sideways, no movement in the market, and it was just brutal. And just sitting there. While it's kind of while we're waiting for that, let me just take a couple of Look a couple of, I'm new. Is it normal for us and New Zealand dollar to have low liquidity issues when New York closes? I've noticed. Oh, that's another thing. You bring up another point. One of the comments by Dave Darby said that he's kind of new. Is it normal for a market or a currency to behave certain ways during certain times of the day? And yeah, it's very normal. That's another tip that you can use while you're trying to scalp is you don't scalp at lunchtime, right? Right now it's noon, 2 o'clock Eastern time. The bulk of the day, the bulk of the trading day is done in New York, and so not generally a good time to be scalping. Look at that market. It's just gone into nothingness. But you watch this market here, and pretty soon you'll see that flicker. You'll see that market start to build a little bit of volatility, and hopefully, now it may not expand enough to make any money today just because of the time of day, like David was saying, but regardless, it will increase in volatility at some point, and the trick is to be there when it happens, and to take advantage of that move. And nothing. This always happens when you're trying to demonstrate something with live markets. You don't get the market cooperating the way you want to. Okay, there was a little bit of a little push lower, but you notice how it hasn't increased the volatility and the speed. The flicker's not there. It's just a push lower. That was just simply one trade pushing the market lower, and then it sat there. So no increase in volatility. There, a little adjustment higher. Actually, this is kind of good to kind of just read these candles. So watching how that bar forms, we're still in a very narrow range, but hopefully we'll give it another couple minutes and see if we can get that volatility to increase. Okay, now you're starting to see a little bit of increase. So it moved up, it moved down, it came back up, and now it's up. It came up to the middle, and now it's up at the top of that little range. So there was a series of trades that fired off right there. So that's a good sign. That's a good sign that, someone out there is trying. That was a higher speed candle than normal. And someone's trying to get something moving in the market. Another tick. Let me just kind of call out the ticks, and maybe you can hear those ticks as they form. Yeah, we need someone to come back from lunch. All right, put the steak down. We got some trading to do. All right, we're into a new candle, and again, you're seeing nothing. No activity in the market. There's a tick lower, boom, boom, boom. Now we're another tick lower, but not speed, so it goes. You can tell the speed of this current candle is less than the speed of the previous candle. So we need that speed to increase. We need it to move faster than that. There's a little bit of a break to a lower ground. But again, see how it's sitting on the bottom. That's our biggest volatility candle. Okay, there we go. That's our biggest volatility candle right there. And again, that's what we're looking for. If we can catch that candle, as it forms, oops, not that, didn't need that. If we can catch that candle as it forms, that's really the trick. Now, obviously, right now, bad time of day. You don't try scalping techniques in the afternoon. But the concept is true. The concept is real, and you'll see that over and over and over in the market. And your scalp setup just literally just needs to take advantage of that building volatility. So there you have it. Let's just review real quick a couple of things to help us if we're employing a scalping technique. First thing we want to do is realize that the scalping technique is only going to be effective during volatility. So we need to learn how to identify volatility in the market. Tons of ways to identify volatility indicators, but my personal preference, watch the candles. You know, the candles aren't filtered. They are what they are. They come through as they come through. And so your best, most unobscured view of the market happens at the candle level. So keep an eye on the candles. Number two, watch the speed of the candle as it develops. So you're looking for that transition. You're looking for that transition from low volatility to higher volatility. Or in other words, the market as it's moving from a contractionary period into an expansionary period. You want to take advantage of that. So watch the speed of the candle. The speed of the candle is going to give you an indication how much interest is going to come into it. And just like in the example, the speed of the candle before set up the higher volatility candle that we observed in the market right now. Third thing is to look for those scalps after the markets hit support resistance levels. So use market structure to identify when you're going to get higher volatility candles versus lower volatility candles. So that's really the nuts and bolts of volatility and scalping is you're really trying to identify and pinpoint those times when it's conducive for that style of trading. Otherwise, there are many other opportunities in the market. You can do a lot of things. You don't need to scalp everything. Place a few position trades, take a couple of, setups, whatever it is. But, when in doubt, you can always throw scalps into anything that you do. And that's a good way of scalps. I love scalps for the pure simplicity that it books profit into your account. You're just looking to put small bits of money into the account consistently, increasing your income for each trading session that you're there. So there you have it, folks. At any rate, let me look through the questions real quick. When is the market Dennis Anderson, when is the market most volatile? Most volatile during morning opening sessions. So opening session of London, opening session of US. Both of those are high volatility periods. And then also any news events. So news events drive volatility. So look for news events when you're trading. Good question. All right. A question asks if I'm going long on silver big time. I am building, would talked a little bit about building a position and investing at the beginning of the session. I am starting to build a position in silver right now for sure. Peterson Kirsten, where are you from? I'm from Denmark. I have a Nordic name, I do. I've got a bit of Nordic blood in me, definitely. I'm from Utah, though. I was raised up in the deserts of Arizona, so a little ways from Denmark. Do you scalp any and all pairs like this? Yeah, anytime. So Dan asked the question, do you scalp any and all pairs like this? Absolutely. Any opportunity I have to put a scalp in, I'm going to take advantage of that. If I see the setup and it's happening, I'll take advantage of it. No matter if I'm long in my position trading or short in my position trading, it doesn't matter. I'll still try and set up to catch those little scalps as they form in the market. So again, it's just a technique to put money into the account. Jeff Wraith asks about indicators that you have on your screen. I prefer just a clean, simple screen. The only indicator that I have on, and if you could call it an indicator, is that I'm charting. We chart the bid, so the chart only represents the bid price, but I'm also looking at where the ask price is. So the green line is the asking price. So that's the only other thing. And sometimes I use that to see where the spread is getting bigger or not bigger. You'll see the spread, the distance between the current price and the green line. Sometimes you'll see that get wider prior to news events. So that's the only indicator that I really have on the chart. Oh, no moving averages. Just I drew some stuff on the charts. So, all right, traders. Well, let's wrap up. We talked a little bit about scalping, using a scalping technique while you're trading. Again, you can use this technique anytime in the market. It doesn't matter. You're not forced to adopt a scalping strategy for your entire trading session. You don't have to think that you have to scalp your entire trading session. What you do is you use a mixed approach to the market where you build positions, you look for setups, you do different techniques, and then when you see an opportunity to scalp, you by all means take advantage of that. So that's one of the first things. Again, just to review, look for those periods where volatility is increasing, where the market's starting to go from low volatility to big volatility. And that's where you want to get in on the scalps. One of the biggest things that I like to look for is speed in candle development, how fast that candle's developing. That'll take you a long ways in knowing, where that big candle's going to come in. You look for the speed. Speed precedes the move. So just remember that. Other than that, we'll wrap up for the day. Thanks everybody for tuning in. Make sure you subscribe to our YouTube channel. We do these fairly frequently, and we're constantly looking to discuss new topics and kind of get into the nitty-gritty of trading, and so I think that you'll find some good material, some good learning material as you join and subscribe. And if you subscribe, then you get alerts to let you know that we're doing these and that a new one's come out. So make sure you subscribe. Thanks everybody. We'll see you next time. Happy trading, and see you next Wednesday. Bye.